Hi, I'm Linda Eads. I'm going to give you an update on the RECM Global Fund. I'm going to talk specifically to the first quarter of 2017, how markets performed, the impact that had on the fund itself, and then also look a little bit at how the fund is currently positioned. So if we look at the first quarter of this year, it was again another strong quarter for the fund. The fund delivered 6.1% versus its benchmark, which delivered 2.5%. And by way of reminder, the benchmark for this fund is US inflation plus 6% per annum. And that was really on the back of very strong performance coming out of not only the developed economies from equities, but also emerging markets. And in particular for this fund, it was the fact that emerging markets had a lot of positive sentiment attached to them over the quarter. It's starting to look a little bit more positive with regards to global growth. That obviously has a very positive knock-on effect for emerging markets, and in particular for industrial metals. So the resource stocks in the portfolio, which have their fortunes linked to industrial metal prices, which were up, all rallied during the quarter once again. So it really was that boosted the fund's performance, but also any stock which kind of had some sort of link to emerging market exposure. So within the global fund, that includes banks like Standard Chartered, which obviously have a lot of exposure to those regions. It includes luxury goods companies, and we have quite a few of those in the portfolio. We've got US handbag and shoe retailer Coach, we've got Hugo Boss, we've got Swatch, we've got Richemont. All of those did very well during the quarter on the back of that sort of positive sentiment with regards to emerging markets. And the only area of the portfolio which sort of had a little bit of a knock were the energy stocks. Oil prices, in contrast to sort of a lot of the resource prices, were actually down. That was on the back of concerns with regards to oversupply, and that did have a negative effect on some of the holdings in the portfolio, namely Japanese sort of energy producer Inpex, and of course stocks like, for instance, BP as well. But overall, a very, very good quarter for the RECM Global Fund. So looking now at the composition of the portfolio, if you look at the top 10, it's really a mixed bag of global value opportunities. You can see there's quite a bit of diversification there. You've got your UK and Portuguese retailers, Tesco and Sono respectively. Those are the top equity holdings. You've got some great high quality industrial sort of engineering type businesses, and that includes the likes of Alfa Laval, Agreco, Rolls-Royce. You've got Japanese natural gas and energy producer Inpex, luxury handbag and shoe retailer Coach, Implats, who we're all familiar with, obviously the second largest platinum producer in the world, Mail.ru, which is a Russian internet company, and then lastly Buffett's Berkshire Hathaway. And that sort of last stock gives you quite a broad exposure to attractively priced but quality US businesses. And I think the US is a sort of area that you've got to be a bit careful about. There are a lot of very overvalued businesses in that area, and we really do trust Berkshire Hathaway's capital allocation as well. So you're getting that on top of this portfolio of great assets. So the fund is actually a lot more diversified now than it was 2 years ago. And at that time, you would have seen at least 6 out of the top 10 stocks were resources. Because, quite frankly, they were really the only stocks that were significantly cheap at the time. Then about 45% of our equity exposure was in resource stocks. That's close to half of the equities. Now that's actually under a quarter of the equity allocation. So that's reduced quite substantially on the back of obviously those resources stocks performing incredibly well and us selling as those prices have risen. And that makes sense because as that margin of safety has sort of diminished, really we need to kind of pull back that exposure, and the difference between the share price and our calculation of intrinsic value is narrowed for most of those businesses considerably. Although we do still think a few are quite compelling, and of course that includes names like Impala Platinum, which we spoke about already. So if you look at the asset exposure, you can see that we have just over 16% in cash. That's useful. We definitely want to keep some dry powder for the opportunities that pop up. We think that expectations are very high. They're more likely to be disappointed, I think, than met or exceeded even. And at some point, it's going to become apparent that there is just too much of a gap between the fundamentals on the ground and these very, very high valuations we're seeing, particularly, as I say, in regions like the US. So the RECM Value Fund is a very robust portfolio of undervalued, high quality opportunities. We think that shift towards value as an investment style will continue going forward. We think that we're really in early stages of that cycle, and we believe that there are a lot of sort of tailwinds which will support it going forwards. The opportunity set has widened. That's great for all value investors, and we're certainly taking advantage of that. And RECM, at the end of the day, we have both the willingness in terms of our investment philosophy, the way that we think, how we're wired to take advantage of that, and of course the ability to take advantage of that on behalf of our investors.